if you're going to be in business, you want to have at least some understanding of financial statements. Now, you don't necessarily need to go into all the jargon and technical terminology and be on top of all that stuff and go deep. But you want to be able to have a conversation with somebody about financial statements and not feel intimidated and be able to have a basic conversation. Because financial statements tell the story of a business in numbers. So it's like going to the about page on somebody's website and reading the story of their business. This is the story of their business in the numbers. And it's an equalizer. Once you understand how these statements work and how to use them and look at them, you can compare businesses and see how different businesses are operating. So it's kind of the common language of business. So it's important to at least have some understanding. So there's basically three statements when we say financial statements. There's the balance sheet, the income statement, and the statement of cash flows. Now the balance sheet tells you your net worth, and it's as of a period of time. So most financial statements in private businesses are produced monthly. At the end of every month, you're going to get financial statements. And the balance sheet tells where you are in terms of net worth as of that time. Now, public companies typically do quarterly, and all businesses do annual. So whether it's the end of the year, the end of the quarter, or the end of the month, the balance sheet says, here's your net worth as of that point in time. So the way we calculate net worth is we take assets minus liabilities, give us our net worth. So an easy way to think about that is if you own a house and a car. Let's say you own a $50,000 house and a $10,000 car. But wait, you have a mortgage of $40,000 on the house and you still owe $2,000 on your car. So while you have 50 plus 10 is $60,000 worth of assets, you owe 40 plus 2, you owe $42,000 of liabilities, so your net worth is $18,000. Assets minus liabilities gives you your net worth as of that moment in time. Now, over time, that will change. So that's the balance sheet. The income statement tells you what your profit or loss was over a period of time. So again, if it's monthly, it tells you what your profit or loss was for that month, from the beginning of that month to the end of that month, or beginning of the quarter to the end, or beginning of the year to the end. Whatever the period, it tells you what your profit or loss was for that period. And on the income statement, you may have heard the term top line, because on the top line of the income statement, it's sales. Some people call it income, some people call it revenue, but it's the top line. Then you have direct expenses, gets you a gross margin, and then you have typically fixed expenses, get you down to a net margin. That's in its simplest form, just those 5 things: sales, variable costs, gross margin, fixed costs, net margin. And that'll tell you your profit or bottom line. The net margin is your profit or loss, or the bottom line. So you go from the top line to the bottom line on the income statement, and that's where those terms come from. And that's for that period of time. That's the income statement, which is also, because it's about profit and loss, called the profit and loss statement, or the P&L for short. You hear a lot of people talk about the P&L. That's what they're talking about. Nothing more than an income statement: sales, expenses, net margin. So, or profit. The last statement is the statement of cash flows. And that is basically cash in to cash out of the business. And you say, well, isn't that the same as sales in and expenses out? Yes and no. It's different than that because of the way accounting deals with cash versus sales and expenses. So all you need to know is that they're different, and that the statement of cash flows is actual cash in the business versus what you book as sales and book as expenses. And that's it. Those are the 3 statements. Balance sheet tells you your net worth as of a period of time, or at a point in time. Income statement, or P&L, tells you how much money you made or lost over a period of time. And the statement of cash flows tells money in or money out over that same period of time. And that's it. With that level of knowledge, you can now have a better understanding and a better conversation when somebody's talking about financial statements and not feel like you're totally lost.